At some point this year is going to be trading for north of 30, probably around 33.
Let me tell you, love and hate are some serious emotions. Researchers have determined that we experience 27 emotions as people, and of the 27, there are primarily 8 emotions: anger, fear, sadness, disgust, surprise, anticipation, trust, and joy. From these 8 primary emotions, we end up with the unique concepts of love and hate, which are described as emotions but can also be an attitude or sentiment. For the purposes of this conversation, let's put love and hate into the sentiment category. As of late, there seems to be one of two camps when it comes to silver: you love it or you hate it. And frankly, hate has been running rampant. And while I'm largely blah or indifferent with my feelings about silver, I can accept that it seems like I've been more in the hate category as of late. I promise you, that's not the case. I like to think of myself more of a realist, and when it comes to my money or investments, I stay away from emotions because feelings like love and hate can steer you in the wrong direction. Al Green taught us that love is something that can make you do wrong, make you do right. And hate, well, that's an especially powerful sentiment. As I always preach, emotions and all of its associated attitudes and sentiments can have a significant influence over us when it comes to shaping our perceptions, decisions, and interactions with the market. The only time I'm concerned about these emotions is when I use it to help me gauge where the market is. And as Rick Rule says, I love hate.
I own them because I like what's hated. And the silver bugs have been so disappointed by silver since the Reddit silver squeeze of 2020 or wherever it is, that there's no speculative premium in silver at all. The adherents to silver hate it. And I love stuff that's hated. I love stuff that's hated where if the narrative changes from hated to neutral, I get a triple.
I also love the haters because it tells me I'm doing something right. Regardless, the hate is strong in the silver market as it stands at the crossroads of a potential recession, which is generally bad for silver, and quantitative easing, which is really good for silver, and a strong dollar, which is bad for silver, and a weakening dollar, which could be really good for silver. Which leads me to the next potential tailwind for silver in particular: China. While we are moving towards a deglobalized world, we are still a very interconnected world, and China is definitely struggling. And if trying to find their way through an economic slowdown wasn't enough, the recent court ruling forcing Evergrande to liquidate their holdings is only going to make things exponentially more challenging for China. This Evergrande situation is so concerning because 70% of Chinese family assets are tied to real estate, and every 5% decline in real estate prices wipes out 19 trillion yuan, 2.7 trillion in US dollars. In terms of China's GDP, real estate is 25% of their GDP. And in comparison, in the US, it's only 8%. And we all know the problems that the last housing market crisis created. So you can only imagine what a slowdown in housing would do when it's 25% of your GDP. Now, let's talk about China's stock market, which has fallen 21% since 2021 and was down 11% in 2023, while the S&P 500 was up 20%. China's economic situation has the potential to really shake up the world, especially precious metals and silver in particular. So to get a better understanding of China's situation and how it will impact us, and in particular silver, I had the opportunity to sit down with one of the smartest people out there, Lee Organs from Wealth Research Group, and he gave me some incredible insights into China and why silver is his favorite metal for 2024. Here's a clip from that interview. Before we get into how China's economic policy is going to impact silver in particular, what do you see as the 3 major challenges facing China, and why are they really struggling?
It's not falling apart, but it's definitely not the engine for growth for the rest of the world, not anymore. Between 1991 and 2020, the era where the United States stood as the only hegemony without any real enemies and threats, they obviously were the biggest benefactor of hyperglobalization. It's important to understand that China, because of its demographic situation and geographic situation, not to mention its political structure, is not ready for a world where the United States acts differently towards it. And it is acting differently towards it. Of course, it started with Trump and tariffs. Even before then, it started with Obama's pivot in 2011 from the Middle East to the South China Sea. The topography and geography of China makes it, and always made it, a regional superpower, but never a global hegemony. And that's important to understand because people, they over exaggerate China's power or growth or whatever else. Secondly, let's talk about their demographic situation. That creates a situation where your tax base, if you have an aging economy in terms of the demographics and no children, because most families have one child and a pet, you're ruining your tax base. And in an economy where 25% of the GDP comes from buying more real estate to grow, that's a problem. In the United States, in the subprime mortgage, just to compare, 8% of American GDP was real estate. So to have 25% of GDP real estate and real estate being in a problem, it's three times the subprime mortgage. Now, their banks are very well capitalized and they can work their way through this, but it's a huge problem. So their real estate is a problem. Third problem is their political structure. The rule of law keeps moving around, which deters anyone from going there and doing business. Corporations are moving operations out of China into Vietnam, into other South Asian countries that have great demographics, actually more skilled labor. And the United States obviously is moving labor into northern Mexico and probably later on to Colombia and other countries that can facilitate that. Mexico being now the number one trading partner for the United States, surpassing China. So now you have a situation where your main advantage to the world, which was cheap labor, low cost, and lots of manufacturing, it doesn't exist anymore. China is now the 53rd cheapest country. There are 52 countries that manufacture cheaper than China. That is another big problem for them. So between all of this, they are in a bad spot. And you can see in recent days, they've banned short selling in the stock market. They've started a huge stimulus program. It's not falling apart, but it's definitely not the engine for growth for the rest of the world. Not anymore.
You shared that you're investing in a number of metals such as gold, silver, nickel, copper, and others. But if I said to you, you could only invest in two metals, which two would have your highest conviction for 2024 and why?
Silver, number one. If you look at the gold silver ratio, so that's number one. Let me explain. If you look at the gold silver ratio, gold is trading at about 2030 an ounce. Silver is less than 25. So you're looking at a ratio of over 80, a ratio that's very favorable to silver, but it's been 80 to 1 for many years. So let's talk about why 80 to 1 is now could be very overvalued. So one thing that's happening right now is China's stimulus programs are going to weaken the dollar and actually strengthen the Chinese economy. That's a big issue that helps silver. Strong Chinese recovery helps silver. The second thing that's about to happen is lowering interest rates in the Western world, and that is going to weaken the dollar. So the weakness of the dollar is the biggest driving force for prices of silver. Anytime the dollar is weak, silver is very strong. Gold can rise even with a strong dollar, but the correlation between a weak dollar and silver is the biggest of all commodities. So if you believe in a weaker dollar for 2024, you by default believe in a stronger silver. I think silver this year, at some point this year, is going to be trading for north of 30, probably around 33 at its high for the year.
There you have it, a price prediction from Lior. And I have to tell you, after reflecting on what he shared, I think he just might be 100% correct. I think he's given the most comprehensive and logical explanation for exactly how silver could increase 50% this year. Finally, I'm not going to say I doubted what Lior had to say about the Dixie and silver relationship, but I've never heard anyone make that point. So I pulled up a chart of the Dixie and silver price and take a look. I mean, it's definitely negatively correlated. And while I don't have the data to calculate the correlation coefficient from the eye test, it looks like it could be around 0.8, which is considered a very strong or very high correlation. I really want to thank Leo Gantz again for sitting down with me and letting me pick his brain. I truly think he's one of the smartest people out there, and I recommend that you go to his website, www.wealthresearchgroup.com, and there are countless articles there for you to read, and you can even see his actual stock portfolio there, so definitely go check it out. In the comment section, do you think $33 silver is reasonable for 2024? What metal do you think Leor's second pick is? Or simply put an A plus in the comment section to let everyone know that you always stack smarter and never stop learning.